Hello, everybody, and welcome to today's webinar, Selling to the Overlooked Prospect. As you all are probably aware, September is Life Insurance Awareness Month, and although we shouldn't need a month to go out and talk to our clients about life insurance, it is a great time to be reminded of how the products we sell truly impact the lives of our clients. This webinar, I wanted to do something a little different. I wanted to dive into a couple of scenarios that are often overlooked when it comes to life insurance. And I am confident that after today, you're going to look at these markets in a different light, and you're going to have some tools that you can go out and immediately start using and growing your sales. For those of you that don't know me, I am Seth Groff, and my goal during these national webinars is to challenge your thinking. I want to identify a market, give you tools to prospect in those markets, pointing you the right direction regarding questions you need to be asking your clients, and ultimately help you close the sale and get your clients the life insurance or the protection in general that not only they need, but they deserve. And today I am joined by Scott Zagurski. Scott is a marketing mastermind here at Assurity, and he will be sharing some thoughts regarding how to prospect utilizing social media in these particular markets. You want to say hello, Scott?
Hello, everybody. I'm looking forward to our discussion today.
All right. Well, if you don't know who Assurity is, remember we are a mutual company that focuses on Middle America. And the great part about being a mutual company is that we can focus on our policyholders, not the stockholders. Also, remember that we can be your go-to shop or go-to company for not only life insurance, but also disability and CI. And we have a wide range of products all the way from simplified underwriting to fully underwriting. So depending on how involved your client wants to be in the underwriting process, we have a product that aligns with their needs. As I mentioned on today's agenda, we're going to look at a couple of sales ideas for both term insurance and participating whole life. You're going to get a list of questions that you can use during the sales process. And at the end, Scott is going to talk about social media and look at a social media playbook that will either help you get started prospecting utilizing social media or take your social media game to the next level. So I know Scott and we both watch a lot of the content that comes out during Life Insurance Awareness Month from all the carriers out there. And we all know the typical life events that people talk about are triggers to buying life insurance. Most companies talk about marriage, buying a house, and having a baby. And these events, these life events, are still great times to go out and talk to your clients about owning life insurance. But there are some other life events that you should consider. And that's what we're going to look at today. We're going to look at what approach you can take when there's a change in family status. We're also going to look at pre-retirement concerns and how to utilize life insurance to help a client prepare for retirement and still get life insurance protection. So first, let's take a look at change in family status. And specifically what we're talking here is about life insurance when there's a divorce. And unfortunately, we do live in a country where divorce rates are high. And this can be a very emotional time for your clients. There are also some special financial concerns that are often overlooked by not only the clients, but also the agents. And so you can really help that individual navigate this particular situation when one of their clients or one of your clients unfortunately has to go through a divorce. So really the unique needs and considerations that you should look at is, do the clients and the ex-spouse have existing life insurance? I mean, obviously that's going to be the first question that you ask. But the follow-up question is going to be, are they individual policies or are they tied to a job or work? And the reason for that is because, when they set up the divorce decree or the divorce agreement, they might say, yeah, I have life insurance through a job, but if that job changes, they might not be fulfilling that obligation that was part of the divorce agreement. Then that leads into, does the divorce agreement require life insurance company or coverage? They might have to pay child support. They might have to pay alimony. Anytime that there is some sort of supplemental income that one of the involved parties are obligated to pay, you need to protect against the possibility of losing that in the event of life or, event that there's a death or even a disability. And then finally, and this one is often overlooked, is do the beneficiaries need to be updated? So those are the things that you really need to be looking at and discussing with the clients, and they will be thankful that you provided some insight to those particular situations. Now, obviously, this can be very difficult to bring up with a particular client because it is an emotional time, and some people might not be comfortable approaching their clients, but we wanted to give you some conversation starters that you can use in these situations that aren't really offensive, and just really letting them know that you are an asset to them and that you can help them through this difficult time. So a couple of conversation starters that you can use is, you and your family's needs for life insurance coverage may have changed. I would like to position myself as a resource for you. Or life insurance can be an important matter in divorces. I'd like to get together and talk about your life coverage and make sure it still meets your family's needs. And then finally, dealing with life insurance can be an important part of the divorce process. I'd like to sit down with you and talk about your coverage and your particular needs. So as you can see, if you use those words, and remember that we all are in the communication business, and so we just have to make sure that we're using the right words in difficult situations to make that client comfortable and open them up to the ideas that you can share. So in this particular situation, I want to look at a case study. And we had Samantha and Paul. They were both relatively young, 30 years old, and they have one daughter, Emily, that's 3 years old. And Samantha is going to be the primary caregiver. And both Samantha and Paul, you know, when you looked at their life insurance coverage, it was really limited, and it was through their employers. Well, part of the divorce agreement was that Paul would pay child support, and we just based the amount on the national average. And ultimately, we'll pay that support until Emily turns 18, or for 15 years. So in order to solve that problem, you know, the 15-year term policy would be the best solution. And we just added up the total amount of monthly child support payments that they would need to pay over the course of 15 years. And then we also added a $500 a month DI rider. Now remember that DI rider, all you have to do is check a box on the application and select the benefit amount. We take out all the guesswork with the DI. It's going to come with a 90-day elimination period and a 2-year benefit period. But now, for only $17.88 a month, we protected and ensured that even if something were to happen to Paul, his obligations would still be met. And so all parties are happy because Paul knows that his daughter is going to be financially secure, and also Samantha's happy because she knows that that income will not go away if something were to happen to Paul. And so really across the board, everybody's happy with the solution, and it's very affordable, as you can see, with the $17.88 a month. Now, Samantha went a different route. You know, this whole event in her life, you know, she isn't comfortable with the uncertainties. And so she was more attracted to the guarantees associated with the whole life policy. And so what we did for Samantha is we wrote a $50,000 whole life policy, but we added a $200,000 20-year term rider. And the reason we did that is because Samantha now is only relying on one income. And so her budget was limited as far as how much she was willing to pay for life insurance. But we still gave her the guarantees associated with whole life and the guaranteed premiums, guaranteed death benefits, and guaranteed cap value growth. But we also were able to cover a much larger life insurance need with that term rider. And you can see that this particular solution came in at $74.30 a month. Now, the good thing about the term rider is that as Samantha's financial situation improves, the agent can go back and convert a portion or all of this term rider so that she can convert it to the permanent solution. Now, however, after 20 years, Samantha's life insurance needs might have changed, right? Now Emily's out of the house, so now she might not have as high of a need for life insurance, and so maybe the $50,000 whole life policy is enough, plus this policy is participating, so maybe she received some dividends. So now that if she put those back in the policy as far as paid up additions, then that death benefit would grow. And so you're really giving her a lot of options down the road at the end of 20 years, and she can adjust or she can reevaluate her life insurance needs at periodic times throughout those 20 years and make adjustments as needed. So a very good solution to a difficult situation, but at the end, both Samantha and Paul made the right choice in purchasing additional life insurance to make sure that their family is protected even during this difficult time of a divorce. So the next market that I want to look at is look at the pre-retirement market. And interesting, if you look at LIMRA statistics, the most common financial concern among consumers is the ability to afford a comfortable retirement. And what we've seen is that another question that LIMRA asks is why individuals bought life insurance. And we saw, a change in the top 5 this year in that actually supplemental retirements, or they purchased life insurance to supplement their retirement, actually cracked into the top 5. And if you haven't seen that list, the number 1 is going to cover burial expenses, help replace lost wages, transfer wealth, pay off a mortgage, and number 5, and for the first time that I'm aware of, supplement retirement actually broke in as the top 5. And so more people are looking at life insurance to help supplement retirement. And it makes sense because they need the life insurance, and if they can use the life insurance to help accomplish their top financial priorities, which with most people is saving for a comfortable retirement, it just makes sense because they're ultimately getting double use of their dollars. They're going to have the death benefit while they're working, and then at retirement they can start accessing that cash value as needed. So when you're talking to this demographic, there's some unique needs and considerations that you should look at. The biggest one, and this always goes back to life insurance, if something were to happen, do they want to pass that financial burden on to their loved ones? Also, remember that the only way that they're going to be able to achieve retirement is with their ability to earn an income. So if a premature death, that income's gone. Now the amount that income was, or that amount that spouse was contributing to the retirement account is gone, and so there might be a need to replace some of that income while the retirees are working. Also, retirees are working longer, right? You see a lot more people working past 65 due to the fact they didn't save properly for retirement, so there's even that life insurance need past 65. Also, during their retirement, there might be relying on a pension or Social Security. In the death of one of the spouses, that could be eliminated. Also, it's interesting when you look at the baby boomers, a lot of them have 2 different generations relying on them. You see some of the baby boomers still taking care of their children, but then also now they're having to take care of their elderly parents. So if something were to happen to them, that need, or that, service that they're providing to their kids and to their parents would be gone. Also, some people think they are covered through work, but unfortunately that life insurance goes away when they retire. And, at Assurity, we're always talking about whole life insurance, but whole life insurance can earn cash value, or the cash value will grow, and, can be used to supplement retirement. And so that's really what we want to look at today, is how life insurance can be used, not only during, specifically during the accumulation, and then also after when they want to take out distributions. But just some easy conversation starters. Who will financially be dependent on you when you retire? What is your current pre-retirement financial plan or investment situation? And then finally, are you looking for insurance that offers a cash value that you can draw upon to help supplement that retirement? So in this situation, we got a pretty good client that we're going to look at. We got Mike. He's 45 years old. He's been very successful. He's accumulated $500,000 in a diversified portfolio that he's saving for retirement. And, one of the things that he has done is he diversified. And he used something that is called the theory of prudent investing. And he's put a portion of that $500,000 in what's considered a security base, but primarily in CDs, because he wants some of his assets in something that is guaranteed to grow every year, and there isn't any risk in going backwards. And so here's what the theory of prudent investing looks like. And you can see that there's 4 different parts of the pyramid. And down at the bottom is the security base. And really, this is where whole life insurance is a great fit, because you're going to get that average return or internal rate of return of 2 to 4%, but there's 0% chance of a bad year, okay? And whole life insurance is really the only product that can guarantee that the cash value will go up year after year. So that's really where we're looking at. And basically all we're doing is we're reallocating the money that he has in that security base. So instead of putting it into the bank CDs, we're actually going to put it into a single premium whole life policy. And the reason we did that is because we were able to get a higher internal rate of return, actually a much higher internal rate of return than actually keeping them in the CDs in the current interest environment. And so we took that $100,000, we put it into a LifeScape single premium whole life policy. We used the dividend option to purchase paid up additions. And then we also put $50,000 of that premium into what's considered the base premium and $50,000 into the single premium insurance rider. And if you're not familiar with the single premium insurance rider, basically the way that works is that Assurity takes a load off the top of it, but it results in much higher cash value for the client. And that's why we did it, is because we really wanted to get that internal rate of return up. And so you can see that at the end of 20 years, so during his pre-retirement years or his accumulation years, that $100,000 grew to $216,000 of cash value. That's a 5.49 pre-tax equivalent return. And then the illustrated death benefit at age 65 is $397. So not only did we have that cash value growth, which this client was primarily concerned about, but we also had a death benefit along the way that would help replace his income or provide other financial support in the event of a premature death. And really, this strategy, if you look at the other alternatives in that that base or that security base of the theory of prudent investing, this strategy, and if you've never looked at Assurity single premium whole life, it's very competitive in the accumulation market. And so this was just a great solution for Mike. It accomplished a couple of different things for him, and it just resulted in a higher internal rate of return on the policy than what he was receiving in his CDs that he had the money in. And really the advantage of it is, you know, he got the tax-free death benefit, right? It's life insurance. He'd receive that tax-free. He does get tax-deferred growth. However, remember, this is a single premium whole life policy. And due to the fact that it is a single premium whole life policy, it is considered a modified endowment contract. However, it still grows tax-deferred. It's just when he does take distributions out, he would be taxed on any amount above cost basis. And obviously, if he accesses it before 59.5, he would have a 10% penalty. But we're looking at it at 65 and above. And when you look at the other solutions up there, you know, there's tax implications with them as well. And so we're primarily concerned with getting him the most accumulation, and the single premium whole life allowed us to do it. So it is a MEC, so you don't get tax-free distributions. However, you know, it is going to be tax-deferred, and when we access that money, it would be taxed at ordinary income. However, it's not that big of a deal if you look at the other solutions that he was using. Also, he has some accelerated benefits. Remember that Assurity single premium whole life, you can accelerate up to $250,000 if he's permanently confined to a nursing home. So now he has this in place where he'd have that additional benefit. And then ultimately, he just had a higher growth potential than the savings account or the other financial alternatives. So it really was an accumulation play, and the single premium could give them a higher internal rate of return and still provide that guaranteed protection that they were looking for in that security base. So with that, hopefully now you have a better idea of the opportunity with individuals that are either in pre-retirement or experience a change in family status. But now let's take a look at how to find them on social media. So I would like to turn the floor over to Scott. And as I mentioned earlier, Scott is an insurance marketing mastermind, and he's going to share some great ideas on how to prospect through social media. So Scott, go ahead.
Thanks, Seth, and thanks for that overview on some of those prospects that we forget about sometimes in the life events they're going through. So at Assurity, we have developed a social media playbook here recently with a common sense approach to what can be a lot of buzzwords for some folks out there. Obviously, social media, I don't need to get into all of the numbers on how many people use it, how ubiquitous it is now, but how to use it and capture it for your business may be a little bit of a different thing. We saw this weekend with the president in the NFL that, yeah, social media was everywhere in the news. You couldn't escape it no matter where you went. And sometimes those powers can be used for good, and sometimes you see a lot of static out there. What we'd like to go over with you, again, in that common sense approach is what we think is very important in establishing your social media presence and ultimately how to get some prospects from those results. So the first bullet you see here is it's about your attitude. And the first page of our playbook quite simply goes over, hey, if you like your job, you are a candidate for social media. And hey, if you're thinking about another career, I'd stay away from social media. Kind of your attitude and your conversations permeate through these spaces. And we've all seen the person that's been a little too negative, and sometimes even the person that's been a little too positive or anxious on social media. And what we want you to do is continue to tell your stories, right, on how you help your clients, how you are service focused, how you can be customer focused, and really what your professional goals are in your life. None of those things should really approach product at all when we look at that second A on approach. People do not want to be pitched product on social media. You see it all the time, those people that you may start unfriending or blocking as they get too aggressive. Or goodness knows that if one more person asks me to friend them so they get free money in a slot game, that if I had all the money for the people that did that, I would probably be rich. So you really have to be careful on your approach. And we're going to get into that here in a bit, but really talk about yourself. Talk about why you're in the business. Talk about how you like to help people, because ultimately how you make your clients happy is a big approach to that work-life balance for you, and spreading information about your work-life balance ends up being very important. On the automation front, we're going to show you a couple simple things beyond more robust tools that you can do. But the one thing I would really caution you, if you've been sold tools that are on automation for responses and replies, there's nothing creepier than that person you kind of have a one-off relationship with that likes every post that you do on social media. I know I had a real estate agent of mine that no matter what time I post, she was the first person to like everything that I had posted out there, until one post that I put out there was that real estate agents are creepy. She also liked that. So not reading and relying on automation won't get you very far. On the awareness front, there's always going to be the next social media thing, right? And it is important to kind of move with those changes. And I don't think right now that presenting your own Snapchat filter is going to get you very far down the insurance agent path, but you need to fish where the fish are. Right now, for the majority of folks, Facebook for people who truly buy insurance is still ubiquitous enough to not have to go further than Facebook. We're also going to show you LinkedIn for some of the approach that Seth talked about, and some of these life events that can be a little bit different. But your awareness ends up being more a function of, are you listening? Are you listening out there, and who are you listening to? As we get into your basic life event triggers, and when you look at what used to be old school referrals, those life events are still there. Real estate agents are always posting stuff on Facebook. We're going to look at some other ways to aggregate that data. Having a child is still one of the number one life events that will trigger insurance, right? The buying a home and having a child. But what has become the norm now are fancy baby photographers out there that are all over Facebook. Why I like this as a particular source is two reasons. As an insurance agent, these photographers are small business owners. A lot of them are part-time and getting into small businesses, and they're looking at how do they bridge the gap and kind of taking this part-time job into a full-time job. They need financial advice. Most of them are starting off on a business, and they are great targets for prospects. They also are great prospects on the referral front because every picture of babies that they take are two parents, typically, that are having those children. And as you start building relationships down the small business path, they're a great source of overall referrals for your business. On the marriage side, caterers end up being an easy target. You typically in towns, you have your handful of caterers that are handling a lot of weddings. These are a great source, again, as a small business owner or partial small business owner that's looking at taking that next leap and going full-time or not. And they also have the client list that you very much want. And we'll show you how to find those there without buying lists. But caterers are a great target. We may or may not want to stay away from lawyers on the divorce side, depending on what type of business you are, but obviously, or type of business you're selling out there. But we know traditionally in the disability insurance space that that's been a target for years. But beyond the lawyers, the paralegals, and other folks that work in those offices, again, as small business owners, are great folks to look at. When you're looking at changing jobs, recruiters and recruiter consulting firms are small businesses in a growth area, especially when unemployment rates are going down. It's harder and harder to get people in staff positions, and you all know that from your own recruiting efforts. But these recruiters are a great source of targets for you as far as following, listening, and searching for those clients. The last two bullets here end up becoming, more life event driven. Seth alluded to, those baby boomers that are what would be deemed a sandwich generation, right? They take care of their parents and their kids at the same time. Sometimes that can transform into an empty nest, on both ends, either, through graduations, even though we know millennials are living a little bit more in their parents' basement as they try to make ends meet and get that first career. But with the job market being what it is, that is changing dramatically. But the parents moving in is not. And that creates a lot of complicated financial problems, both in the caregiving and what they're going to need to protect from if that main sandwich generation caregiver in the middle, something would happen to them. So these are people that you want to watch out for, those life events, and how you listen and look for these people online. But I can tell you right now, if you go into your Facebook page, and if you're on Facebook and you start looking for things like baby photographers, you're going to start finding a source and bridge for prospects. But it's easy to find people, right? How do I really reach out to them? What am I looking for? And how do I start on a conversation? The ideal prospect, when we look at Facebook, I think one of the most underutilized things on Facebook ends up being search. A lot of people will search for that old person they dated in high school and kind of be a stalker. I think you need to use Facebook in its search engine for something that would be more for prospecting. If you just type in selling their house in Facebook or other keywords, it'll allow you to see any publicly available information down those topics. And when you look at the live topics that we have, right, there's a long list there. What Facebook did about 2 years ago is they really started promoting their Messenger app on the phone. Messenger allows you to reach out to people without being their friend. And that can be kind of creepy and Big Brother as you're looking through names. But I think it is important as you're looking through these public posts and people selling their house that you can comment on these things. About 48% of all Facebook posts are publicly accessible. Those things, and the younger you are, the less you care about your privacy and security in general. There's a lot of life event information out there that before you would go to your local list broker, they'd pull a mailing list and they would give you that information, and you'd either try to cold call them or stuff in a mailbox for them. Now you can do a simple search and aggregate this data. If you're truly going to be successful, it won't be just by doing a search and kind of doing a creepy Big Brother post to strangers. Cold calling on Facebook isn't going to work any better than cold calling in other realms. It may be a little faster to get your results and a little cheaper, but ultimately isn't going to get you what you need. In order to get you that conversation, and Seth presented some great conversation starters for you, you need to have some relevant content that you can link to from a Facebook business page from your personal page and offer that up to people. If you look at somebody who's selling their house, and here in this second result, right, we have my next door neighbor is selling their house. Who wants to live by me? You constantly see comments like that on Facebook. If you created your own content on Facebook and a business page around an article on the 5 things you need to look for when you are selling your house, again, needs-based, not product-based, and offered that up as valuable content, then you are warming that client up. You are no longer cold calling them. These are easy topics to research online, but to personalize them, make them your own, bring them back to a story that you had with a client, and then post that content either on Facebook or your LinkedIn page is really what's going to show your expertise. You want to promote your own expertise in a way that builds trust, not that pushes product. And going down that from a content perspective where it can be written, or if you have enough gumption to get in front of a camera, just to present a short video that tells that story, also really improves the share factor there. Lastly, if somebody, you can tell if they've read your content or not, then you want to reach out for the conversation. But it isn't until then that you will really truly find success. So I challenge you all today, use these things like selling their house. Goodness knows there's enough relationship status changes on Facebook that you will see these life events happening before you. You never before have you been able to see that, but reach out, expand your network, allow those folks that maybe you were denying before as being Facebook friends. You want to expand the network and your reach on these outlets to then look for, in a search mode, to get more aggregate data and the prospects you want. On LinkedIn, Seth talked about folks, changing their jobs. Depending on what avenue you sell insurance products, or if you're a financial advisor, there's always a lot of things to think about as you are changing jobs. The first one that comes to mind in today's day and age ends up being, what am I going to do with this 401k? If I've been terminated, what am I going to do? If I have to move money, typically within a 60-day fashion, or if I'm having tax implications. Those are conversation starters for life insurance and other products that we need to be looking at. On LinkedIn, the #1 keyword phrase used by people is seeking opportunity. And while I've never used that phraseology in my personal life, I've never gone to somebody and said, I'm seeking an opportunity for employment. That is the vernacular there. If you do a search, and you can see here a result from my network, 391,000 results of people in my immediate network are seeking opportunities. So my immediate network would be first, second, or third connections, right? So when you look at the 7 degrees of Kevin Bacon effect, when you look at those types of prospects, you may need a warm handshake for some of these people. The closer they are in your network, you can do these filters in LinkedIn. You can filter by your first connections, your second connections, your third connections. Where are they in proximity from you? Without ever buying an ad on LinkedIn, you're just using the power of your own network and how do I expand that? Then again, creating content, which again, what is the best thing to do in rolling over a 401k? What are those questions that I need to know if I've been terminated? What are ultimately those conversation starters you want to have? Posting that content is so important on your own LinkedIn page, on your Facebook page, and then connecting these two sources to get the most out of that ends up giving you the best chance to reel in prospects and find them like you haven't before. But search is so underutilized. There are a lot of different tools that will basically do this search function for you, but they've really expanded this in LinkedIn and Facebook lately. Before you get into the paid realm and start setting up your own ads, use these free tools. Try putting some of your own content out there, and I assure you, you will start getting those conversations, and you'll start just getting into a habit of listening for these conversations, finding the prospects you need, and then ultimately, the beauty of social media is they're going to start giving you referrals. They're going to start giving you different clients because you're the one who helped them appropriately. And that's where, lastly, I would talk to you about those conversations on Facebook. Having a Facebook business page is important, but I can tell you that people aren't going to be fans of it. You need to link people from your personal page to start those conversations over to a business page. And that business page, ultimately, the most important thing you can do on social media for yourself to build trust is to have people give you honest reviews of your services on those business pages. Give them a link over to that. Allow them to give you both positive and negative reviews. If they're all positive, just like you've been out there, you don't believe them. There ultimately are going to be some unhappy customers along the way. Allow them to vent. Allow other people to see how you handle those complaints in a timely manner, and those things are ultimately going to help you build up your business, create more leads, and extend the book of business you already have. So today, if you're not on LinkedIn, please get out there. About 68% of insurance agents are. Don't be afraid. There are plenty of people out there, and as soon as you put your name out there, you're going to see about 50 people asking you to connect right away. So have a plan on these things. Use your search and content triggers, and then if you're feeling great after that, you've built up content, you've built up a network, then you ultimately need to look at how do I go into the paid realm. And maybe in a future webinar, Seth, we'll go over paid as part of a strategy next.
Yeah.
That's what we had for today. We'd like to open up for any questions you would have. And we really want you to go out there and find some of those prospects that may have been forgotten, because ultimately we want to better serve the customer bases that we have and extend them.
Yeah, well, that was all great information, Scott. And, you know, the thing that stood out to me was that it's just a great place to listen and find out what's going on. Yeah, I mean, obviously you have to provide that relative content to be able to start the conversations. But, I mean, if you want to know what's going on in people's lives, that's where it is. So a couple questions that did come in. One, we do send the recording of the webinar out to all attendees, and then I'm assuming we can probably attach the social media playbook as well that you referred to. So all attendees will get a recording of the webinar and also the social media playbook. Another question, with the single premium whole life policy that we discussed, what's the maximum amount that Assurity will take? Currently, we'll take up to $500,000 on that single premium product. If you do have a little bit higher dump in that you want to put into one, give me a call, and sometimes under the right scenarios, we can get approval for a higher amount. Also, about the single premium insurance rider, what ratio can you use for that? There's not a ratio limit, but you do have to keep it under $500,000 of total premium. So that would be the only limit.
We received one more question on the social media side on really how to make a business page on Facebook. We will include a link with instructions that we will put out on how to get started. Facebook has some great instructions out there for how to get that set up, and we'll link you to the right sources along with the other information we're going to send out today.
Perfect. That's it. All right. Well, I'd like to thank everyone for jumping on today's call. I know I picked up a couple of great things, and hopefully you did as well. Remember, I always say this at the end of all my webinars, you have to use the information you gained. Otherwise, you know, ultimately it wasn't worth your time. So consider going out, looking at these particular markets, and start incorporating social media into your daily practice. And I'm confident if you do those two things, your sales will grow. So once again, thank you, and watch out for next month's national webinar. We got some great things planned as well. So thanks.